Hello traders, Gary Wagner here. It is 11:58 in Honolulu, 4:58 in New York on Monday, 13th day of February 2023, and this is the daily report for gold and silver. Tomorrow's CPI report will be an integral part of future Federal Reserve decisions, and that's why market participants across the board are waiting to see what that report reveals. Gold traders are particularly focused upon that report after the revision in December showed that rather than a decline in inflation, there was an increase. Of course, increased inflation could be signaling that it is more persistent than the Federal Reserve is expecting, and therefore a much tighter, hawkish monetary policy. Gold, basis the most active month of April, is down $10.20 and currently fixed at $1,864. The dollar was fractionally lower today, adding about $5.40 to the cost of the precious yellow metal, which means that today's $10 drop would have been much greater with a neutral dollar. The dollar index is down 0.33% and currently fixed at 103.175. Silver futures also declined in price today, with the most active March contract currently fixed at $21.99.5. That's after factoring in a decline of about 8 cents or 0.36%. This first chart is a daily candlestick chart of gold futures. We have plotted various potential levels of support and resistance. We were wondering whether or not the 38.2% retracement level could be a possible level of support. Gold prices opened just at that price point and then traded lower. The low today corresponds to the simple 50-day moving average, and if that does not hold, we would look at $1,846 as the next level where we could find support. That corresponds to a retracement level of 50%. We have converted our standard candlestick chart into a Japanese average or Henkinashi chart. It fixes the open from the midpoint of the prior candle and thereby takes noise out of the chart. It also gives us solid information about the strength of a trend. And so when we look at this chart, we can see the pivot from bullish to bearish as expressed by the small-bodied green candle with upper and lower wicks. In terms of what this chart tells us for the most recent data, we can see that both Friday and today's candles contain no upper wicks. That is a solid indication of a continuing bearish trend. However, the body size remains small when compared to the first two red candles. Although these technical indicators are absolutely important, whether or not gold rises or falls tomorrow will be based upon the inflation report for January. This next chart is a daily chart of the dollar index with one Fibonacci retracement sequence, which begins right around March when the Fed first started to tighten and raise interest rates up to the high that occurred in October of last year at 114. The correction that followed was pretty deep. It was just below the 78% retracement, and we have seen it come up a considerable way, now trading above the 50-day moving average. On a technical basis, look at 104 to 105 is a potential level for resistance should the dollar continue to rise. Lastly, I do want to take a look at silver, and there are a couple of things that are apparent. First, When we look at the 50-day moving average, if you recall from our gold chart, the 50-day moving average acted as today's low, whereas in silver, we have clearly broken below that price point. And where we're deriving some really valuable information is first the 100-day moving average, as well as the 50% retracement, all lining up at $21.79. That is current support. The 200-day moving average also lines up with the 61.8% Fibonacci retracement. The fact that silver is below the 50-day moving average and gold's low today was just above it shows the disconnect between gold and silver pricing. We know that tomorrow's report will have a reflection in both precious metals. However, gold will react more sensitive to the data than silver will. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Have a great day. Bye-bye.